This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. We have seen a lot of pressure here over the past couple of days in the grains, corn, soybeans, and wheat, all taking it on the chin. I think a lot of this is on the back of the U.S. dollar kind of regaining some strength, not only regaining, but taking out multi-month highs. Potential double top with the August highs to be determined, but we're keeping a very close eye on that. If it continues to break out, it will be a headwind for grains going forward. If it retreats, potentially that puts some wind in the sail. So keep an eye on the U.S. dollar. Outside of that, we had poor exports this morning in corn and soybeans. That kind of accelerated the selling on the open and really didn't let up throughout the morning and into the afternoon session. Some of the key technical levels we're looking at for December corn, 360 and a quarter is the October 11th lows. If we break and close below there, there's easily another 5 to 6 cents in a relatively short amount of time. And then below that, obviously the psychologically significant 350 level. Now, as far as the soybeans are concerned, 837 was the low end of the range in the back half of September. This is a must-hold area for the bulls in this market. If this gives way, I think it opens a door to accelerated selling pressure and potentially takes us back towards those lows of 812 and a quarter. Now, with that said, we will be rolling out to the January future, so you're going to want to keep an eye on that as we go into the weekend and next week's trade. Wrapping things up with the wheat. The wheat, obviously the most affected by the strength of the U.S. dollar, breaking down and retesting those July 11th lows of 490. We kind of broke down below that. I think we're near the oversold conditions where there's little juice left in this grape to the short side. So if you've been short this market, I think this is a spot where you buy back that short position, or at the very least reduce. If you want to be long the market, I think this is an excellent opportunity from a risk reward perspective to give it a chance to the buy side. If we do continue to close on a weaker basis to round out the week, it does open the door for 473. But until then, I think this is a good opportunity to give it a shot. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.